Today's jobs numbers disappointed a lot of economists, including John Herrmann, the founder of Herrmann Forecasting, told me last month that he sees unemployment, the rate falling to 9.2% by the end of this year. He did expect, of course, jobs to be added for the month of December, and we getting a lot of messages, John, about your forecast today. Joe Saluzzi writes in and says, next time you have Mr. Optimist John Herrmann on your show, ask him why his jobs forecast was off by 156,000 jobs.
Okay, we'll take that number right from the get-go. So jobs are down. We had them down 85. They came in 85,000 down. Weather impacted, stripping out, making the number on weather seasonally adjusted. It came out to a basically 65,000 haircut there. So the 85,000, 65,000 can be attributed just to weather. You got another 10 to 12,000. Hold on, to the postal workers, and that leaves you left with 10,000 decline in jobs, basically on consensus.
We saw your report, we went through it, and we said, oh, I can't believe it. John Herrmann's blaming the weather, because it seems like when anything goes wrong in economic statistics, everybody blames the weather.
It's like a retail. You're like a retail flag.
I know, but you want to know what I was surprised at? We've given such a haircut to weather-sensitive sector jobs over the last 2 years. I was actually surprised we could clip another 250,000 workers in that area due to bad weather. But clearly, weather played a role. And for this month, we also know weather's going to play another hard role because the weather, because the reference week is next week, and we're supposed to go into the deep chill.
And I bet you like that gain in November.
So basically, the gain in November was good. It was tracked what the models were predicting. When we look at the private service sector, private services, all the private sectors, that grew jobs 2 consecutive months. In addition,
October was revised up, though.
So we had
more deterioration in October.
Right. Well, we had private sector job. In the private services sector, job growth 2 consecutive months. Let's go to another thing. I heard a previous guest of yours say something about, there's not enough income. How can consumers spend? How can they buy anything? Okay, let's give it straight up. The numbers show one very important thing. The take-home income, just take-home, so that's hours worked plus wage growth. Take-home income rose 0.2% in December, following a big increase in November. And for the entire quarter, it was up 2.2% for the entire quarter. That's the best quarterly gain in take-home income for the average worker, the average production worker.
Job.
Going back, okay, fine. But the unemployment rate is stable. It did not deteriorate, and it included.
You got to talk about.
We're going to talk about.
Let me get back. Let's talk about first of all the 861
is on fire.
Let's talk about the 861%
or better this quarter
who dropped out of the labor force.
Okay.
What happens when those guys come back? Because they didn't clearly drop out of the labor force just to go shopping in December, right? They can't find a job. They're not getting the money anymore.
They're frustrated.
You can't just attribute 1 month. This is a household survey. A survey of 60,000 families, 60,000 households. You can't just, extrapolate from such a small sample to the entire economy. The entire economy in the month of December decides to just walk out. But the thing is, even with that little caveat, you can look at the data, and the data shows that of that giant exodus, if you will, they counted about 420,000 was already attributed to a decrease in private jobs, according to that survey. So a lot of that is already out. So when they come back in, most likely they're going to come back in. I agree with one of the previous guys. When they come back in, they're going to be coming back in with jobs.
Let me ask you, were you, though, you've been talking to us for a lot of months, and you expected job creation to December. Were you a little disappointed?
I was disappointed, but, when we knew weather would be an issue, and I knew, there have been other economists really highlighting the economists who were looking for a decline of around 80 to 100,000. They really went all in with the weather, and I listened to their arguments, and I knew the weather was an issue. I just did not build in enough of a drag.
You knew the post office was an issue too. Let me ask you something. In your note today, you say cautious hiring was one of the problems as we went to the end of 2009. We saw the 5th month of increases for temporary workers. Is it possible that it's not just cautious, that corporations in the U.S. have learned that they can hire temporary workers, use them for cheap, abuse them, and then throw them out when they don't need them anymore going forward?
I think the thing is this: as the labor market continues to strengthen, all the high-frequency data is showing that the labor market is strengthening.
What do you mean when you say high-frequency data?
High-frequency data is looking at all the jobless claims, weekly jobless claims reports, plus anything that's sensitive to high-frequency activity. The consumer spending numbers, that kind of thing. Everything is more or less continues to firm up. Productivity is phenomenal.
Not firming up.
True, but hold on. Productivity is phenomenally strong. We're looking at, again, another quarter of over 5% growth in productivity. The profit margins are widening. Earnings are growing. People just a month ago were saying fourth quarter earnings, combined S&P, would be $59. It's now up to 62, 63. So we should hit $80 combined earnings, $80 or better for this year. And then you tack on any kind of discount rate, whether it's a 5%, 4%, 6% discount rate, well above the markets, and you're still saying, S&P would be fairly valued if it was 1,350. So bottom line is we still see the basic cycle of the firming up of the job conditions, improved earnings are really in play here, so we're going to see how it plays out.
We'll see what happens. We love having you back.
John, thanks so much. We gave him kudos when he was right last month, and this month,
he holds his
not so
ground.
much.
John Herrmann, thank you. All right, do have some headlines cross.